Good afternoon and good morning, everybody. I'm Jeff Thomas, Executive Vice President of Corporate Platforms here at Nasdaq. We appreciate you all joining us for this special event. I want to start by thanking our partner, the Small Cap Institute, or SCI. We've been lucky to be able to leverage their expertise as we put together this program. SCI is composed of CEOs, board members, institutional investors, and journalists, and provides free private membership community to expand your network and access a wealth of resources tailored to companies under a $2 billion market cap. This is the third consecutive year that we've been hosting the Small Cap Forum, and we're proud to be able to present a program geared specifically towards the small cap community, featuring some of the best thought leaders and subject matter experts in our network. This year, small cap companies have raised over $5 billion in capital through IPOs on Nasdaq and have represented over 88% of operating company IPOs on Nasdaq. All the topics being discussed here today are derived from conversations with our over 2,500 Nasdaq issuers that qualify as a small cap company, and they represent some of the most frequently asked questions and concerns raised by our small cap companies. Our lineup of speakers have been carefully selected due to their ability to offer unique and differentiated insight, along with guidance for dealing with some of the biggest challenges facing small and micro cap companies. It's our hope that you'll be able to come out of today having learned something that you don't currently know, so please feel free to engage in discussions and ask as many questions as you can. It's important to us that we capture the voice of small cap companies, especially as we continue our work within the issuer advocacy area this fall. We take pride in our efforts to continuously reduce regulation, regulate proxy advisory forms, and ultimately streamline the process of being a public company. Remember that we'll follow up with responses to any questions that don't get answered during the live Q&A. So thank you all for joining in to the third annual Small Cap Forum.
My name is Stephanie Bowie. I'm head of investor engagement for the West Coast, Midwest, and North America biotech teams at Nasdaq. I'm joined today by our two panelists, Moira Conlon, founder and CEO of Financial Profiles, and Luke D'Angelo, chair of the board of directors and CEO of AppTech Payments Corp. Moira, perhaps I'll pass it over to you first to intro and provide a bit more detail on your background.
Sure thing. Thanks so much, Stephanie, and thanks to the Nasdaq for this great, and then the Small Cap Institute for this great opportunity to speak today. So I'm the founder and CEO of Financial Profiles, and we are a strategic communications firm that helps clients with a broad range of communications needs. So we do everything from investor relations to public relations to ESG communications. We work primarily with public and private companies across a variety of industry sectors. And our real focus is helping companies to leverage best-in-class communications to really build their profiles and support growth by getting access to growth capital.
That's great. Thanks, Moira.
Sure.
And Luke, your background?
Moira, Stephanie, thank you, and we're glad to be here. I'm chairman and CEO of AppTech Payments Corp. We're based here in Carlsbad. Our background is basically fintech and focusing on the payment industry at all levels. My background is a private investor, real estate, and venture capital. I've been with AppTech since 2013, and we are very humbled and honored to be part of this podium.
Great, thank you both. And then very quickly, my background prior to joining Nasdaq 2 years ago, I was in investor relations for 10 years in the tech and consumer retail sectors. So I may chime in as well today along the way with some thoughts from an IR and engagement perspective. Now, as mentioned, we'll be discussing how an effective IR and PR program can impact a company's public perception and how finding ways to integrate the two can make for stronger messaging and a more cohesive external story. We are planning to reserve time towards the end of the panel for audience Q&A. So if you have any questions along the way, you're welcome to submit those and we will do our best to answer them. So let's get to some questions. To kick it off, a question for both of you. The panel today is focused around influencing perception. In your words, in your thoughts, how would you define the concept of influencing perception in the context of a company's image and reputation?
Stephanie, should I start with that one?
Sure.
Okay, so when I think about this topic, I think about it as really having to do with how you show up in the world and the impression that you make on the audiences that you're trying to influence. So that could be customers, investors, all kinds of people, right? And when we think about small cap companies, one of the things that we always recommend is that small cap companies kind of tear a page off of the corporate leaders, right? In an effort to adopt their communications practices and to look bigger than they are. And in our experience, that's been just a great way to sort of distinguish your company from the hundreds of other small caps that are out there, really walking the walk and talking the talk of the bigger companies, okay? And from a communications perspective, I think that starts with having a clear message, best-in-class communications materials, starting with your website, which I think is really your face to the outside world, but that trickles through everything else from your investor presentation to your earnings call communication. And the last point, which Adam was just highlighting in the last session, is being prepared for every interaction with the street or the media, right? So really being prepared with your key messages and making a good impression. That's how you positively influence the audiences that you're trying to reach. One last thing is just kind of getting out there and telling your story in the right places. We worked with a sales coach early on at my firm, and he talked to us a lot about acting famously. So on that point, think about getting in well-respected media outlets. Think Bloomberg. Think about being a keynote speaker or an expert on a panel at an investment banking conference instead of just showing up for one-on-ones. All right. So really, in a nutshell, it's about positively influencing perception by showing up in the right places with a good story to tell and some engaging thought leadership to share.
Great. Thank you, Moira. Maybe building off of that, another question for you, just based on your experience working with companies from both an IR and PR perspective, can you share examples of ways that companies have successfully used or integrated IR and PR to positively influence their public perception and in turn, hopefully enhance shareholder value?
Absolutely. So we do a lot of we do a lot of integrated IR and PR where the two really kind of work together to pack a punch. And I think it's fair to say that you know, many small cap companies we work with think that IR is an absolute must, which it is. And they look at PR as kind of, you know, something that's optional, kind of a nice to have. But we think that the two of them together really can pack a punch. And PR is a really effective way to, you know, amplify your company message and story. Okay. So I like to think about PR as just really another channel to get that same message broadly disseminated to all kinds of influencers, right? So it's just another channel, a broader audience that you can leverage to capture mind share, get focus on your story, you know, and you reach and influence an entirely different group of people. So it's not, you know, only a fixed group of people tune into your earnings calls each quarter. So it really can help in many ways. All right. So I have a couple of examples I was going to share today. The first one is one of our clients that's a Nasdaq listed global consulting firm. And you know, a lot of small cap companies think that they can't get good media. So they say, well, I'm not going to get in Bloomberg. I'm not going to get where I want to be. So I'm not going to spend my time doing this. But if you're smart about it, you really can. So in this case, we helped this CEO build her presence in the media by basically building thought leadership and a talk track around themes that are currently being covered broadly in the media: the future of work, the now of work, all the trends around that, and to connect her business, which is a consulting firm. So these trends are obviously related, but this really helped us get her in the game with Bloomberg, Yahoo Finance, Nasdaq Trade Talks, you know, TD Ameritrade, Fortune, Vox, all kinds of media outlets who are looking for qualified spokespeople to talk on these topics. So with this particular client, we started off there, and then we've been able to connect with these same reporters to help this client tell their corporate story more and more over time. So the trick here in this case was really connecting leadership up with trends that the business press and the media are already covered to build brand recognition, corporate reputation, all that good stuff. We also support this company with social media to make sure that there's a consistent message being delivered across all channels. And more companies are starting to use social to capture mind share with investors. And I think that's a real smart practice. All right. And then just in terms of the connection between PR and valuation and IR for all that, it's all connected. So I think what's important here is that, the primary purpose of PR is, people think about it as driving revenue, right? So potential customers go on and see the CEO on the news and they say, gee, I should think about hiring this firm, right? Investors go on to the media and they say, gee, I should invest in this company. They seem well positioned and they seem to have a real smart CEO. Okay, so all this really drives valuation. And I just share quickly one other example. We work with the Korean American Bank, another great Nasdaq listed company. We helped them on an integrated communications plan. So they were a small, underfollowed community bank, not that small, 40-year history, but unknown and under the radar. And they really wanted help in raising their profile, getting some recognition for their unique strategy and for their national, what's today more of a national footprint. They were considered sort of an LA-based Korean American bank. And so they wanted to take up their game in communications and build their profile. So we worked with them to really, tell their story in all the trades. So American Banker, Bank Director, California Bankers Magazine, Los Angeles Business Journals, and others. Where, so really heavy trade and local media, which is a great way for small cap companies to get started. And we also helped them celebrate their 40th anniversary with the Nasdaq bell ringing, and we leveraged all those photos to get them additional coverage on the company. So those are just two good examples. In that case of the bank, all of this media they feel has really driven customer engagement and acquisition. It's driven, referral sources. It's helped them attract talent. And frankly, it's made all of their current talent in the banking industry. Talent is very competitive. And it's made them very well positioned to keep their current staff. The whole staff's engaged with this media effort, and they really love it and take pride in it. So two, I think, good stories, and many more where those came from, Stephanie.
I agree. Those are fantastic examples. Thank you. Luke, something for you, as someone who is in the seat leading a small cap company, how do you build company presence and industry relationships on both the IR and the PR side, especially perhaps without some of the resources that a larger company might have?
Well, Moira, that was some very good points, and thank you, Stephanie. I got to tell you, for AppTech, what has worked for us is first and foremost making sure our company personnel and their morale is high, and they are treated with tremendous value and respect, because ultimately that trickles out into the marketplace, not only with, most importantly, our customers, but with shareholders. Shareholders are always determined to communicate with the company, and it only takes one bad, apple to basically put doubt into, a cast of shareholders. So for AppTech, it has worked making sure that our employees know the message, and if they don't know the message, then they're not part of the solution. If they know the message, they are part of the solution, and that happiness and that confidence comes out into the marketplace. Being consistent in our message through our employees to the marketplace is an absolute must. Being a fintech company and working with a diverse amount of customers it can be very challenging. Whereas in certain industries, you're focused on one sector. Where we're at as AppTech Payments is we are focused on many sectors. So our customers that are working on one aspect of business has nothing to do with another set of customers that's working on a totally different aspect. That has to be greeted and met with the employees. It starts with the employees, right? So making sure that our employees are telling the right story and a consistent, story with what we are doing with PR groups, IR groups is very important. Having our IR, similar to what Moira pointed out, it starts with the website. That is the face in today's market, making sure that message is clear so everybody understands what we are doing starts with the employees. So for us, it's making sure our staff and our partners are all well aligned with a consistent message to the marketplace.
Thanks, Luke. In a similar vein, many listeners today do play the role of both IR and PR. So in your experience, for either of you, how do you suggest balancing the demands of both the media and the street to ensure you're giving adequate time to both?
I'll be glad to start on this one. For AppTech, having a diverse message but a consistent message is important for us. As I have basically stated, a lot of our customers and what they do have nothing to do with each other. So keeping a consistent message in the marketplace to make sure our shareholders and groups who are representing us can be challenging, but it can be very rewarding, because what you're focusing, say, on the medical side or on the automotive side or on the entertainment side, those are completely different challenges, but the consistency of what we are doing with those groups has to be the same. And for us, it's important to make sure that the PR groups are representing that consistent message with our technology, with what our goals are in the marketplace, and only creating answers and not additional questions. And that has worked very well for AppTech. It continues to work very well for AppTech. We keep our minds open, and we listen to those who are experts in IR and PR and listen to their suggestions. AppTech Payments Corp is very we benefit from having a diverse and consistent delivery of our message. Like Moira was talking about, certain business journals and certain magazines and certain groups, some of these groups have nothing to do with each other, but the message that we are delivering is consistent, and that is what's important for us in the marketplace.
Luke, I think that's awesome, and I love hearing that about the consistent message, and even more about using your employees as your brand ambassadors. Lots of times companies have a good message platform at the top, but they don't take the effort to educate the brand ambassadors on what that is, and so there's turns out to be a lack of consistency. So I think that's awesome. Stephanie, back to your point on, how does everybody do this without, the resources of a larger company? It's an interesting point, but I think in some ways, I've worked with both small and large companies, and sometimes in small companies, you can actually get a lot more done than with large companies, because they have sort of, they're nimble by necessity and definition. And so really, I think it's about realizing that today's job of communications is huge, right? It really is an all stakeholder game, and companies have to think about all these different audiences and how do we effectively, crack the code here with the limited, an expanding base of work to do, with limited resources, as you point out. And I think it really starts with getting a team and a strategic plan together, right? And that requires some know-how right? So experience and expertise on the team. And it kind of takes a ringleader, somebody to be, you know, really leading the charge. And I happen to love the idea of taking down the silos between IR and PR and really having people that consider themselves, you know, able to do both, right? And there can be leverage in that. So I think that's important. I think communications programs should be right-sized, you know, and realistic in terms of the size of the company, right? So, you know, it's for a small company with limited resources, it's about working, you know, smart and being realistic and not expecting to conquer the world or to kind of throw everything out there and see what sticks. It's really about a right-sized strategy and consistent execution on that. And it really builds, one thing builds on another. So it's about getting the foundation in place, getting the messaging in place, and then thinking carefully about who's the right audience for now and how are we going to cultivate those relationships, right? I think another thing that IR folks should realize is that they're generally very, some IR people are kind of afraid of the media because they're not familiar with the audience. Once you learn, frankly, learning about how to work with the street is probably harder than it is to learn how to work with the media. But once people have a level of comfort with the media, investor relations people can be extremely effective in working with reporters because they know the business so well, right? So I think I love the idea again of coordinating the IR and PR. We run into still too many companies where IR and PR just work in complete silos and press releases are being drafted and nobody's checking with the IR team about what's going to happen when that press release about the big new contract goes out, and the analysts are wondering, you know, what's the story on it. So it really does need to be synced up. Okay, so those would be my thoughts on that.
Well said.
Agree. I'd like to take it back really quickly to something that Luke, you mentioned that I don't think is specific to AppTech, but is I think more and more common with companies these days in that business models are crossing sectors. You're not just a financials, you're not just a tech company, right? And so there are many that kind of cross the line across many sectors. So for those companies, as you're thinking about your external messaging, do you find that landscape is more challenging to navigate because you need to influence or kind of educate people in different ways to have them understand your story?
It is all about education. It is all about making sure that the message is consistent. Despite the challenging landscape we may be working in, whether it's the desert, jungle, or the Arctic pole, you know, the message has to be consistent. And educating our customers and our shareholders so they understand what we are doing can be challenging because a lot of people are used to one way and hearing one way. So when they're getting mixed signals, that tends to throw companies off. But in AppTech's case, we try to the best of our ability to make sure, even though we have a diverse way of delivering that message, the message is consistent when it's delivered. And we first strive on educating, and if educating doesn't work, then we re-educate until the message is clear. So that is what has worked for AppTech, because it is a complex field out there. FinTech, there's a lot of competitors, there's a lot of landscapes, there's a lot of people with one way, there's a lot of people with other ways. And it's a very diverse market with a lot of sharks in the way that will bite your foot off and limit your capabilities if not done right. So we try and get through these shallow waters infested with sharks by providing a path of guidance, and that is all reinforced around education.
Thanks, Luke. Moira, perhaps a question for you. When it comes to messaging, what best practices do you feel companies should employ to ensure that their communication aligns with both their IR and PR goals.
Yeah, Stephanie, that's a great point. And, you know, it's interesting because when companies first go public, at least companies that go public in a more traditional IPO, there's a lot of work done on messaging, right? You have a lot of smart bankers around the table, and everybody's very focused on making the story hum in the IPO roadshow. You travel into the future lots of times, and 4 years into it, 5 years into it, companies will have sort of disjointed messaging. We often find ourselves going right back to that IPO decks when we want to get back to basics here. So I think messaging is where it all starts. Okay, and that's something that too many companies forget. So there's clearly you got to get out there to the right audience, but it starts with the messaging. So one of the first thing that we do, and we consider really the cornerstone of a successful communications program, is we start by developing the message. So we step back and we look at the competitive landscape, and that changes all the time, right? So Luke, especially in a field like yours, right, you have to constantly have your eye on the competitor. You don't want to change your message every quarter, but you do need to take an annual step back and see kind of where things are. So I think conducting some competitive analysis, making sure that your positioning statement or about us, is accurate and says who you are and what you do. And then we like to create what we call a message box. And it basically, a message box is basically the top, 5 messages that you want to communicate in, consistently to the street, to the media, and those messages are backed up with proof points, right? And they can address all the usual things that the street cares about, right? From the market opportunity, the unique product or solution that you offer, so they're all the your leadership team, whatever the key things are that make your company a compelling investment opportunity should be on that message square, right? And then, we use that, we rely on that all the time to back to the message box. When we're doing a press release, we try to incorporate some of the key messages in the press release so that we can keep bringing them home in the investor presentation, in a media interview. It's all the same thing, and you just want to kind of consistently beat that same drum. And it's kind of by reiterating the same key messages across communications channels that companies really build brand. All of a sudden people go, oh yeah, that's the company that ABC. So messaging is really a foundational element of everything that companies do. And once the messaging is squared away, so to speak, it's really important to train all of your spokespeople and brand ambassadors on the messaging. And so we do a lot of training with clients to help them leverage those messages in Wall Street meetings, with investors and analysts, in media interviews, getting, we always say that when you get asked a question, it's really an opportunity to deliver a message. And so if you really believe in that and you go back to it all the time, you'll start changing the way that you communicate. And it will become more effective because you're not just answering the question that somebody's asking you, which may or may not be that relevant, but you're answering the question and then bridging onto a topic or a message that helps you differentiate or explain better your business. Does that make sense, Stephanie?
Mm-hmm. Yeah. There's actually a question from our listeners that I think might tie in well here. And it's really about strategies that are effective in either driving PR to grow its output so that there's more content for IR, for investors. And so leaning into that, I think the question is really, is there one that needs to come before the other? Does one feed the other one? And kind of how to think about prioritizing IR versus PR to make sure there's discussion and material and messaging that feeds into both, if that makes sense.
Yeah, I mean, it's, so first of all, every public company kind of by definition in as part of getting public has to start doing investor relations, right? Some companies are already doing PR before they go public. So we work with a lot of, maybe sort of later stage privates, say Series C funded companies that are thinking about going public at some point, or maybe they're thinking about getting bought, or maybe they're thinking about raising their next round of capital. So we leverage PR for those companies, and we try to leverage it smart. So we try to leverage, we help them with their messaging even as a private company. And we like to think of it as value-based messaging. So if these companies are trying to raise capital, go public, get bought, whatever, they need to sort of have a message that speaks to the value drivers of their business. So we help them adopt sort of Wall Street public company messaging early on in the game. And then we help them get that messaging out to the right media outlets and help them also present at private stage conferences and things like that. So private stage Wall Street conferences. So there's lots that companies do early on in this if they have the mind share and think about it and get started. Most of our companies, it seems, do PR, more product launch kind of PR, not so much this kind of PR when they're private, and then they start thinking about PR when it comes to listing day, and it's an all-time first to to start engaging with the financial press and all that on listing day, which has its own complications. So in the best of all worlds, it's great to start early. I think that the important thing to realize is that media begets media. So it's not like you turn on a switch and you get on CNBC. Okay. So the way that we usually approach it is by clearly leveraging the content from IR for the media. And it kind of works both ways. Sometimes you're developing interesting thought leadership for PR that you can then use on your earnings calls. And so all this information is, or you're using executives to speak to the press, and you can use those same executives to speak on a topic at your, at an investor day or something like that. So there's a lot of crossover there. And I think that just like building a following on Wall Street, building a following in the media takes time. And we typically suggest that companies start off educating a few key, pick a few key targets, reporters that are important to you, outlets where you want to show up, either because they're important trade outlets, so they would be important to your business, or they're an opportunity to tell your stock story and, raise the profile of your leadership team. So we pick a few media outlets and we start building relationships with them. We do a backgrounder. We make sure that they know the story, and we build from there. And they'll ask companies to comment on certain trends. They'll talk to you on background. You build that relationship, and lo and behold, they start writing good stories on your company or inviting you on the new, on air to talk to them. So we like to say that media begets media. As you build a profile out there, typically starting with the trades, and lower at trade media, local media, nothing's better than a comprehensive local media story. All that builds, is part of the building blocks. And then the more high profile reporters go and look on your, on your website, or, look at your press releases, and they, news flow, they see, oh, they've already been in the news. These people are qualified, good spokespeople. I'd like them to present on my show so my audience has access to these smart people. So that's a little bit of how it works. It's not a sprint. It's a marathon, just like building relationships on Wall Street. And it's based on, trust and interest and credibility, and, all the same things apply.
Well said, Moira.
Agree. I also think that depending on the topic or what the target audience is, IR doesn't always have to lead, PR doesn't always have to lead. There are kind of natural topics that may take the lead. If it's a product launch or strategic initiative, perhaps it's PR led. Earnings obviously would be IR led, and then the messaging can flow across teams from there and really feed off of one another in that way. So it doesn't necessarily always have to be IR first or PR first. So I think a natural leader could form based on, you know, what is top of mind or what the topic is that you're trying to bring forth externally.
Stephanie, I think that's really important. And like we often use PR, you know, we like to say the first three letters of the word news are new. And that's what a reporter's interested in, news. Okay. So sometimes when you have a great corporate announcement, that is a number one opportunity to build a relationship. You know, you pitch an embargoed story to a top reporter where you've got a trusted relationship. And you know, you're friends for life after doing that, giving them that chance. So that's a great way to do that. And then on earnings, Stephanie, often we have our if we're trying to build the relationships with the top 3 reporters, for example, we will offer them a call with management after earnings calls, you know, every quarter, sort of systematically. And just like companies have call downs with their analysts and their top investors after earnings calls, these media calls can be a nice way to build those relationships and to get some press coverage around earnings, right? So integration, right?
So maybe Luke, I think a question, I'll start with you if that's okay. The topic of transparency, it's often emphasized across media and the street. And so how do you balance that need for transparency and communication when it relates to public perception? And what are the key considerations in your mind for maintaining that?
Well, very well said. And I will say that transparency is reputation management. You know, when a company is delivering, you know, what their thoughts are in a transparent form, whether it's printed or a news article or any of that stuff, it is reputation management. And for smaller companies, it's very important. For bigger companies, it's very important because it sends that message again, one of which is consistency. And we use campaigns, which are mostly IR led, to enforce that transparency and to consistently build that brand, which is reputation management. We don't want companies or other people to think something that they think is an issue. We want them to know the issue. Also, it's very important for a company like us that we don't pick dogfights with other competitors. You know, good sportsmanship conduct is a must, and you have to do that while being transparent. Too many people get in the mud of this and that, and we're not interested in mud fights. We're interested in good sportsmanlike conduct, because you never know who you're going to do business with. And being transparent helps provide that platform of being consistent with good sportsmanlike conduct in the field that we're in, especially. There's a lot of competition out there, a lot of people who think they're right, and a lot of people who know they're right, and making sure that our reputation is consistent with transparency is an everyday challenging goal, because there is so much out there. And, you know, while we are making our mark here in the marketplace, like Moira said, it's a marathon, and it's a marathon of consistency. And with that consistency, it's making sure our reputation management is consistent always. So I would also say that with PR, you know, PR is definitely around product launches. But if you have a strong IR communication, that can accomplish sometimes the same thing as PR. But most importantly, in that IR delivery, it's about making sure that there is transparency. We don't pick dog fights with people, and we're consistent on our reputation.
That's great. Thank you, Luke. So a question for both of you, just given your experience, what key metrics or indicators do you feel companies should track to measure the effectiveness of their IR and PR efforts in relation to just investor relations output, shareholder value, those types of things.
So Stephanie, go ahead, Luke.
Well, I was going to say, you know, it's mixed for AppTech and Moira, who is an absolute expert in this area. I can only compliment what she would say, but I will say for us, making sure we put out our press releases with impact versus just putting out press releases, investor meetings and conferences, so we're actually engaged with our shareholders, and as well as spreading the news. Institutional ownership is very important for a young company like ours that is swimming along with marathon performers and winners who are seasoned working with institutions. You know, earnings per share is something that all companies strive for, but making sure we explain how we're going to get there and how we're making money is just as important as digits, because if there's no explanation, you don't know what you're buying and you don't know what you're supporting. You know, having stakeholder engagement, being engaged with our stakeholders is super important to us. Even though we have thousands of shareholders, we try and communicate with them as much as possible, you know, and being engaged with them, and going back to what we were just talking about, managing our reputation. It only takes a few shareholders to talk about something when in reality it's not. So Moira, I'll pass it off to you because you are certainly on the money.
Well, Luke, we're often held hostage for the results. Okay, so this is a good question for sure. When you're in the consulting business, everybody wants the results, right? So I love what you just said, because it's not always about the holy grail here. So most companies like to, and boards, right, are looking at the stock price and the relative valuation, right, and that's for good reason. And IR and PR should absolutely feed into you know, having a full and fair valuation on your stock. But you know, there's a couple of things that get in the way of that, right? So we always tell our clients that successful investor relations, two things need to come together, right? The results from operations and the perception of those results. And in addition, there are so many factors that impact valuation, right? So, you know, there's quantitative things like revenue growth and earnings growth and you know, things like that. And then there's qualitative things, as Luke was just talking about, on transparency and reputation and credibility. All these things, you know, factor into the valuation, right? It can also valuations can also differ at different times, right? You can be in a down sector where for no fault of your own, your stock isn't well valued. So I could not agree more with Luke that you need to look at, you know, you need to keep an eye on the valuation, that's for sure, and be aware of how you're doing vis-a-vis the comps, and be thinking about, you know, where the, you know, if there's a gap, how you're going to leverage investor relations and public relations to close that gap. But I think that there are many other metrics that need to be considered. I like what Luke was saying about you know, things as simple as good communications, right? So like, are we doing a good job in our communications? Are we telling a good story in our earnings call scripts? Is it a thoughtful story? Are we doing a good job in our press releases? Too often people think that stuff's table stakes, but it's not. So often you'll see not great stuff. So some other things you know, that you know, we look at are things like, you know, and it depends on what the company needs, right? There is no one size fits all. Every company has a different objective and a different situation in terms of where they are in the evolution of their investor relations situation. So, you know, things like a diversified shareholder base, improving sentiment. We like to look at research reports of our company, our clients, and the comps. Sometimes you'll notice that there's some companies that seem to be the Wall Street favorite based on just the headlines and the tone of the research report. So we look at things like that to see, you know, why is this company, you know, getting all the love and we're not. Some companies really need to improve liquidity and trading volume in order to attract institutional support. So that can be something to look at. The number of analysts that are covering your stock can sometimes be important. I happen to think that given how busy analysts are today, that the quality of the research coverage is equally important. And so what kind of success are you having in educating your sell side analysts and helping them get the story right, helping them turn their neutral rating into a buy and helping them overcome their negative biases, things like that. On the media front, you can look at strong media coverage. Was the message sent, the message delivered? And are you being asked back for future interviews? You know, an uptick in the kinds of meetings that you're having at investor conferences. Do you, are you getting more attention? Are you getting, attention from good, top investors, your top targets, right? So I think there's lots of different ways to think about that. And I think that's an important part of investor relations planning. So like right back to the IR and PR plan, having a strategic plan and making sure that you've thought about what are those objectives so that the management team and the comms team, are all on the same page, and the board for that matter. Boards care a whole lot in this age of activism about what IR and PR are up to. So I think everyone needs to be on the same page. What are the goals we're working towards, right? And what's the strategy and execution needed and resources needed to get there?
Absolutely. Yeah.
Yeah, those are really great points. I find that
Awesome points. Yeah.
IR is in particular, and given that's just my background, so that's what I can speak to, that it's really challenging to measure. And so I think thinking about a quality component to your engagements, to your point, Moira, I think is really important, right? The ratio of higher versus lower turnover investors that you're perhaps meeting with, shareholder sentiment, right? And if the street is really interpreting your messaging in the way that you think they are or would want them to, kind of the shift of your shareholder profile over time, over the year, and that mix of investment style, I think is really key. And then for some, if you have access through any particular vendors, benchmarking, I think is pretty important as well, to thinking about how are you doing in terms of the number of events you're attending in a year, how you're utilizing your CEO and CFO participation at those events relative to other companies that look like you, I think can be pretty telling as well. I think that most often you're kind of just in your own box and your own view of what you're doing. So taking a step back, if you have access to that information, to be able to do that and see what your peers are doing can be quite helpful as well.
Oh yeah, I think that makes a lot of sense, and things are always changing, right? So important to stay on the trend.
Yeah. Yeah.
You guys are definitely the experts. That is some very good some soundboarding and feedback right there, both of you.
Well, Luke, now you have a whole bunch of metrics, right? That you can start deciding what's the most important, right?
Absolutely, man. You guys are a buffet of knowledge, that's for sure.
That's a great analogy.
Jeez Louise.
Let's talk a little bit about senior management. How important is it for leaders within the organization to engage with media and the street, and how do you identify how best to allocate their time?
Well, Stephanie, I would say, go ahead on that. Sorry.
Go ahead, Moira. I was going to say, go ahead, please.
Well, I think on this one, it's I think management is at the top of the list for small cap institutional investors, right? So if you asked Fidelity or Wellington or Royce or whoever, what are some of the most important things that looking at a small cap company, they would say management and our assessment of their ability to execute the plan. So I think in the case of a small cap company, it's critical for senior management to show up. In the case of a media interview, of course, if it's like a top business outlet, they're going to expect that CNBC typically, interviews, CEOs. So I think that's for that. But as far as media goes, you could certainly have other members of the management team be involved in media interviews, different business unit leaders, different, wherever there's thought leadership around the company that can help the company build visibility, we would recommend going with that. And then on Wall Street loves to know the top brass. They need to know the top brass, but they're also interested in knowing about the bench of talent that's helping execute. And so no harm, and actually, can be very helpful to showcase some of the leadership team in special topic videos, special topic webinars, and an investor day. Why not show have Wall Street get to know these people? Of course, they need to be trained, and then of course the IR, and PR team can play a key role in keeping these relationships alive, building these relationships, and doing a lot of the legwork for management. So they just need to show up and execute when they have an opportunity. And Luke, I'd love to know, what's been your experience? Have you been like the main person out doing all the meetings at your company?
So for AppTech, yes. It's a multi-teamed effect. So even though I may lead in voice on interviews and some of the coverage, our team is directly involved in that coverage, and going to conferences. Some of the conferences that we are going and we have gone to, I may be there, but it's the rest of the team that is flexing what we're doing, how we're strategizing and working with customers and acquiring customers. And at that point, when those introductions come to me, I basically go into even more detail, which people can appreciate. I think it's very important for senior management to make time for conferences, for interviews, for media, because that message gets out into the market. And as we were talking about earlier, it's about that consistent message, and they've got to hear from top brass. For a smaller and younger company like we are, that is swimming in the lanes of becoming a major player and a major company, it is especially important that management, and particularly myself, gets out there and spreads that message, because we can't talk to our over 5,000 shareholders every minute of the day. And a lot of these folks, they want to hear directly from what I say and what the management is saying and where we're going, because there is no other way. We can't be on the phone all day talking to everybody consistently, even though I love talking to shareholders when I can. So media, interviews, podcasts, magazines, everything in that nature that is led by myself and our team is very important. So we make sure everybody hears from us at all levels.
That's well said there, Luke. And I think you point to one of the key hurdles here is like, you're running a high growth business, right? And the number one priority every day is to run the business and bring in the results, right? So it's all this communications job requires a balance. And I think one thing that's really important for communications teams to think through when they're doing the plan is how, what could be done to get some leverage in the communications, right? How can we kind of, have the CEO and the CFO show up where they need to, but get some leverage from it? And I have a few thoughts on that. Some of the things that we do on that front are, thinking about if we're going to go to Boston, or we're working with a client right now that's going to Boston. And we said, gee, you're going to go to Boston to meet with the who's who there, right? They've got all the big institutions, but that's a day of one-on-ones. Why not hold a group lunch there to meet with some new people? People that maybe don't want to get ready for a one-on-one and do the work, but might be interested in your story, yeah. Right? So making the most of your time in a given city, and really, if we're going to get the time from management to do this stuff, we need to make sure that the day is worthwhile, right? Yeah. And then there's other stuff, Luke. You said, people want access to the management. I think there's different ways to give people access. Video is alive and well, and we just wrote a think piece on this. I think that video is a great way to give people a taste for management without having to go to the, go to the location or get on Teams or Zoom. So, we love for our clients to have a video on their IR website. It can be a message from the CEO welcoming the shareholders, covering kind of the why invest message. What a nice, a nice way to engage people on your website. They came to your IR website because they're interested in knowing about the company. So give them a firsthand taste of management. Get a video up there that says, we're excited to have you visit our site, and we think we have a compelling investment story, and here's why, right?
That's
and then
great.
just a couple other things. I like to make sure that every company that we work with has a recent webcast of their investor presentation on their website. Okay. And many of the investor conferences are not, webcast opportunities seem to be few and far between, with so many of the conferences doing just one-on-ones. And so we have our clients sometimes just, go ahead and tape that themselves. So just having it up there, and then before management meets with investors, IR can just send that out, send the link to people and make sure that they've, at least some of them who will take the time have tuned into the presentation, and you can use the time together to drill deeper into the investment story or answer questions, right? So those, and then, virtual meetings, I think, virtual meetings are here to stay. Great way to leverage time. And to meet with investors all over the country, meeting with your top holders effectively instead of going to some city to have one meeting and a waste of time.
Yep.
So those are a few things. And then I think just identifying thought leaders and executives around the company who can help, and getting them trained up on Reg FD, media training, and, making everybody useful. People love it. It's a career opportunity for people to get in the middle of, IR and PR and to help the company. And, most of the executives we work with on this sort of thing, if they have any interest in it at all, they love it and see it as a feather in their cap, and rising tide lifts all boats, right?
That's right. Well said. Geez.
I agree. I know we're up on time, but I want to sneak in one audience question that I think is tied to this, and is a really interesting question for the both of you. What is your advice for a company with a CEO who's rather humble and doesn't like to tout the story? How do you kind of encourage them to be more comfortable sharing how strong the model is, how strong the story is?
Hire Moira.
You're so funny. You know what? Humble. There's nothing wrong with being humble. In fact, humble. Back to what Luke was saying about transparency being your reputation management. Being humble is not. Humble's right in that category. It's actually a very good characteristic, and people want to know. Investors want to know that they're dealing with straight shooters, right? That are going to tell them a balanced story, good times and bad. Promotion is never good if it's not backed up by proof points, right? So I think investors would prefer a humble CEO. That being said, humble CEOs need to realize that the only reason we're doing the main reason we're doing investor relations at the end of the day is to, frankly, to sell stock. So we have to get comfortable with some amount of marketing. And, I think it's really just helping the CEO understand that, just like he's probably out there selling the features and benefits of the products and the services all day long, these are the features and benefits of why somebody should buy the stock. And it's perfectly fine to be out there, communicating those. And that's really all it is. But in a humble, credible way is fine. So maybe a little bit of media training, that might help. I'm not sure of the situation, but those are some thoughts.
And to add to that, I think it was the previous panel from Third Creek Advisors was saying getting coaching to be able to help deliver that message. There's nothing wrong with getting educated on how to speak. Speaking for coaching is imperative. If you're humble, it's a great asset to be humble. And if you need to get out of the box and learn how to communicate, there's, doing speaking therapy or coaching therapy is awesome. It's a great way to open up and talk about what your product or your company is And in my case, I have a lot of coaches around me, right, who are always saying, do this, don't do that, or say this, or don't do that. So AppTech is blessed because we have so many, I'll say, assistant cooks in the kitchen, right, guiding
Right.
us to deliver that message, and particularly myself. So that's the way I would add on, to complement with what Moira has been saying.
Thanks, Luke. So we're going to wrap here. Big thank you to Luke and to Moira for joining today, sharing your thoughts and insights. We really appreciate it. For those listening, just a friendly reminder that our 5th annual Global IR Issuer Pulse Survey is live. Topics in that survey include similar themes to what we discussed today, and do flow into our annual Global Issuer IR Pulse report, which I think many of you have likely received in prior years and hopefully have found valuable. So I encourage you to take that survey. And if you need the link or want more details, please reach out to one of your NASDAQ partners. Again, thank you today for everything and your contributions and your valuable insights. Thanks, everyone.
Thank you, Stephanie and
Thank
Luke, and
you,
thanks to our
Stephanie.
audience. Super
Yes,
fun.
thank you, everybody.
Okay,
Much
bye,
obliged. You
everybody.
guys have a great day.